You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. It is time once again for TWIFO, This Week in Futures Options. The program where the name says it all. We break down the week that was and indeed still is. From a futures options, trades, and trend analysis, all sorts of fun perspectives. Going to add a fun new wrinkle to that today. In a little bit, my name, of course, Mark Longo from the OptionsInsider.com, as well as from the network upon which all of you folks are binging these days. Remember, if you want to join us after Vol Views tomorrow for Options Oddities, where we talk a whole bunch of amazing and just wild, unusual activity, theoptionsinsider.com/pro is the place to go to get past the velvet rope. Also, get your name in the hat for the June Pro Trading Crate. The clock is ticking for that one, so make sure you get that done before the end of the month, so you too can join the party out there. And then, of course, a lot of other great stuff coming to the land of the pro. We had the Vol Death Match, and of course, Scott Nation's just on there talking all things Vol, so a lot of fun to be had. TheOptionsInsider.com/pro is the place to go as we go around the horn and see who's joining us today on TWIFO. I'm pleased to welcome back our old friend, even though she hasn't been on in a little bit, Miss Catherine Yoshimoto, the Director of Product Management over there at FTSE Russell. Catherine, welcome back to This Week in Futures Options.
Thank you so much for having me. It's a pleasure to be here.
All right, Catherine, then with the gang assembled, we're going to dive right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we get into everything, lighting it up to the light side and to the downside over there at CME Group this week. We were actually off last week for the market holiday, so if we extend that chart back all the way 2 weeks, listeners, then you would see the markets since then are actually pretty close to mixed. I would say about 55-45 green over red out there, listeners. But again, you're pretty close to even on how many winners versus how many losers, which may surprise some folks given the market action we've seen out there this week. I will say the largest percentage mover is to the upside. So something to bear in mind. If we do shake that up a little bit and just look over the past week, then we are still about 55-45 green over red, but we flipped there and the largest percentage mover is to the downside. Can you guess what the largest percentage mover is for the past week, listeners? I bet you probably can. A lot going on in that sector. So tell you what, we'll break them both down for you because we're fun. We'll go out 2 weeks first, listeners. And our light side for the past 2 weeks, number 5, listeners, it's copper, up 5.21%. Again, it's been a great run for the metals this year. Listen to the futures rundown yesterday if you missed some of that in-depth metals talk. Number 4, it's platinum. Is there a squeeze going on in platinum? We talked about that yesterday as well, up 5.74% this week. Number 3, it's heating oil, up 8.44%. Number 2, lean hogs, also up 8.44%, so a rare tie for the 2/3 spot. And number 1, we have soybean oil, up 10.04%. Again, going all the way back 2 weeks to our last show, listeners. Number 5, to the dark side, off 1.94%, is the real estate sector of the S&P. Number 4, we're going out to feeder cattle, off 2.63%. Number 3, live cattle, off 2.77%, listeners. Number 2, our old pal WTI, off 3.57%. Again, only off about 3.5% since our last show. That's kind of wild. And then number 1 to the dark side is oats, off 3.62%. Of course, if we re-racked that to this week, which is the name of the show after all, this week in, then we'll see what's lighting it up to the light side and to the downside this week, listeners. All right, and looking back 1 week, our movers and shakers, let's kick it off to the light side. And kicking it off at number 5, listeners, it's the financial sector of the S&P, up 4.2%. Followed by number 4, we're going precious, it's palladium, up 4.78%. Number 3, back to the tech sector of the S&P, up 4.93%. Followed by number 2, keeping it in the equities, it's the NASDAQ 100, up 4.95%. And the big dog this past week, it's copper. Maybe not the metal you had pegged as number 1, but it's copper. We're getting base, up 5.16%. All right, to the dark side we go now. Listeners, I asked before, can you guess what's number 1 to the dark side? You probably can if you've been paying attention to the headlines. Hint, hint, Middle East conflict, hint, hint. What's been taking a shellacking this week? Well, vol is one answer, but that's not on this show. No, the other answer is the energy complex, and we effectively have an entire dark side bottom 5 of all energy all the time. Number 5, it's heating oil, off 9.35%. Number 4, it's RBOB, off 10% exactly. Don't see that too often. Number 3, it's Brent, off 12.5%. Number 2, the Widowmaker, getting just kicked to the curb, off 12.98, basically 13% on the week. And the big dog, did you guess, listeners? If not, maybe you haven't been paying attention to the headlines. Yeah, it's WTI, off 14.11%. So people argued it overcorrected to the upside when this conflict started. Makes sense. It would overcorrect to the downside potentially as well. Either way, a big move in WTI this week, off 14.11%. As we keep on rolling, let's go out to the CVOL, listeners. The CVOL only gives us a 1 week glance, so that does very much stay in keeping with the theme of the show here, listeners. Remember, if you want to run these numbers for yourselves, just type CME and CVOL into any browser that you're using out there. Then go to that aggregates tab and then select 1 week from the high-low range, and that will get you to the CVOL report for this week. If you look at this, a couple of the trends leap off the page. First off, vol is getting annihilated pretty much across the board, with the exception of one name, which is right at the top of our list, which is kind of wild. And then also, if you look at that, vol annihilation theme continues. This report will also show you the trend for the week. And outside of, looks like 1, 2, 3, 4, 5 days total amongst every trading day for every product this week, only 5 days were actually green. That means vol only increased for 5 days total out of all the products we're looking at here. So mostly red on the vol screen this week. Again, with the exception of our first complex here, which is FX. 8.93 is where FX is hanging out right now, listeners. That's off actually 0.06 today, which is actually a decent move for FX. But on the week, it's at a range of 8.48 to the downside and 9.12 to the upside. So again, coming off its highs of 9.12, but the only product on our list this week that is pretty much close to the upper band of its range for the week. Everything else pinning the needle to the downside. Right below it, we have the Treasury price vol hanging out at 6.06 today, off 0.13 today, and that is the low for the week, the high 6.54. Below that, we have the ag products aggregate C-vol, listeners, 21.42, off about a quarter of a point today, and that is the low for the week, the high 22.84 on the week, listeners. Below it, we have the aggregate metals C-vol, 17.84, almost off 3/4 of a point just today, so they're taking it to the woodshed today. That is the low for the week, the high 1991. So over a 2-point decrease in metals vol just this week. That is a lot for the metals, listeners. Below it, we have the commodities aggregate C-vol, 37.20 today, off 1.1 points just today. That is the low for the week, the high 46.96. So commodities aggregate vol also coming in almost 10 points on the week. So again, keeping with our theme of vol annihilation. Commodities also one of the few complexes here to have no green days at all this week on the vol front. Vol was red every day this week, hence that massive change in vol over the course of the week. Below we have the aggregate energy C-vol, 53.14, off 1 3/4 points today. And again, another complex where the vol has been red all week. That is the low, obviously, for the week. The high 71.1. My goodness. So almost exactly an 18-point decline in energy aggregate vol. Can you guess why, listeners? A little bit of a ceasefire in the Middle East will do that. My goodness. That is a huge vol move in the energy complex in just 1 week. And then bringing it home on the Treasury yield vol, listeners, 109.63, off almost 3.5 points just today. That is the low for the week, the high 116.57. So again, a big move in the Treasury yield vol as well. You want to see all these numbers for yourselves, head on over to CME and CVol in whatever browser you're rocking. But meanwhile, we got Catherine joining us today, so we're going to do a special deep dive into all things equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, welcome to a special deep dive in the equities. You know, it's that time of year, listeners. A lot going on in the equity world and a lot going on specifically in Catherine's neck of the woods. Yeah, we're talking about all things small caps because, yes, it's the end of June, listeners. That means it is recon time, even though that might be changing in the future as well. We'll get there in a second. But Catherine, let's start it off. We'll get to all the fun changes you're making this year and some interesting tweaks in a second. But let's start it off. For some of our newer listeners may not be familiar, what are we talking about? What is recon? And then lay out the schedule for us.
Yeah, thank you so much for having me again, Mark. Yeah, Russell Reconstitution is our annual rebalancing process where we completely re-rank the Russell 1000, Russell 2000 indexes, reset the growth and value indexes to make sure we're continuing to accurately reflect the markets. Now, you did allude to some changes we're making next year. More on that later, but next year we will be going to semi-annual reconstitution, meaning we'll do this twice a year. But for now, this year, 2025, this is our one annual reconstitution, and we are on an annual schedule. We have been over the last 37 years because, that provides a good balance between representation and turnover, because every rebalance brings with it additional turnover as you're changing the memberships, and that it changes the flows of the money, flows of assets between the Russell 1000, 2000 growth value. But that being said, we also want to keep reflecting the markets accurately. The schedule this year, a rank date was April 30th. That was the date, as of date, where we use all of the company information to make our, re-rank the companies as of this year. And then May 23rd was our preliminary announcement date. And now we are heading into the final phase of Russell Reconstitution after the close of U.S. equity markets on June 27th, which will be effective at the open of June 30th, Monday.
All right, and you always have some fun numbers to share with us in terms of the breakpoints and how many assets, how many shares are changing hands in recent recon. So hit us with some of the salient details. Then we'll get into some of the fun tweaks you guys are making this year.
Yeah. So in terms of the breakpoint between the Russell 1000 and Russell 2000, it held pretty steady compared to last year's $4.6 billion. Now, what's interesting is that the biggest companies at the top got bigger as of this year's rank date. So Apple retook the top spot. Microsoft was the top last year. Apple regained its top position this year, and it was over $3 trillion as of this year's rank date. Now, of course, things have shifted since then, but, the ranking, again, is done as of April 30th. What's interesting is that the smaller side declined in terms of the size. So the breakpoint at the bottom of the Russell 2000, which also is the bottom of the Russell 3000, declined a little bit from last year's 150 million to 119 million. The band also, there is a band between that Russell 1000, Russell 2000 breakpoint widened a little bit, meaning that, stocks, are showing greater divergence from the biggest to smallest. So it's just an interesting, interesting to observe the dynamics that are going on in the markets right now. Lots of volatility, and also one of the reasons that contributed to the decision to go back to a semi-annual reconstitution. Now, Russell Reconstitution Day does tend to be one of the busiest trading days in the U.S. equity markets. Last year was a record. We traded almost $220 billion across NYSE and NASDAQ exchanges at the close, and this is attributed we believe to the growth in assets benchmarked to the Russell U.S. indexes, with more than $10 trillion assets benchmarked, couple trillion of that passively.
All right, and you made some interesting tweaks that may surprise some of our listeners out here. Catherine, for the better part of the last couple of years, when you're talking about the equity markets in particular, the conversation seemingly inevitably comes back to this conversation about concentration and about how the equity markets are dominated by the Mag 7, or maybe your Mag 7 plus a couple, or however you want to tweak it. But really, at the end of the day, a handful of names seem to be dominating all of the market share and all the mind share and all the movement. A lot of the names our listeners are familiar with, of course, your Amazons, your Metas, your Alphabets, all that fun. And for a lot of people out there, they look at those names as kind of hot, booming tech stocks, and so they think of them purely in the speculative growth part of their portfolio. But it seems like you folks are changing that up a little bit over there at Russell. Walk us through what changes did you make, and why did you decide to do that this year?
Yeah, absolutely. The past year has been a very impactful in the markets in terms of the Mag 7 concentration, as you alluded to. If you look at how much the Russell 3000 market cap grew, it grew 10% to 58 trillion as a whole. But the Mag 7 group, grew a higher percentage than that. All of the Mag 7 basically grew in market cap, other than one company, which was Alphabet, which declined a little bit, but otherwise the other companies grew in terms of size. You might be alluding to a couple of things with the style index, especially because of the concentration that these companies were dominating in terms of the growth side. They were getting bigger and bigger in weight because of just their sheer size, and they were all of the Mag 7 last year were 100% growth. Now, I do want to clarify that the this year's style determination, it is based on data, company fundamental data, so book to price and growth forecasts, as well as historical growth. So because of the underlying fundamental data, primarily in the shifts in book to price and medium-term growth forecast, 3 of the Mag 7 stocks this year are dipping a little bit into the value side. So those stocks are Amazon.com, Alphabet, Meta, are being added to the value index because some of their partial shares of those companies are exhibiting, a value orientation, and that's why they're getting added to the value index, but not completely. So a couple things going on, not just in underlying fundamentals, but we also, as of this year's March rebalance, well, we do quarterly reviews where we update shares and add IPOs on a quarterly basis. So at that time, we did also implement a capping, in light of RIC 550, registered investment company 550 diversification requirements that, make sure the indexes are investable. They're not exceeding certain weights in terms of the company weight. So that capping methodology came into play beginning in March. But that being said, because of some of the reduction in weight that we saw, as I mentioned, some of the companies are shifting a little bit into value, just the natural order of the market reconstitution, driven by the markets. The capping didn't have to be implemented this June, so that's quite interesting too.
That may surprise a lot of our listeners to hear those high flyers classified or reclassified really as value stocks. But as you mentioned, only partially. It's only a partial allocation.
That's right.
I should also point out for our listeners, that is not it. They are not stuck in the value bucket forever. It seems like your classifications are a little fluid. You put an interesting example in there about Apple, which I did not realize has flirted with both growth and value multiple times over the past couple of decades. So maybe walk our listeners through that process and how a name could maybe jump back and forth.
Sure. With the reconstitution, in styles will continue to be completely updated annually only, even when we move to semi-annual reconstitution. But yeah, Apple, post-tech bubble crash in the early 2000s, was a value company, and that was because of the underlying fundamentals relative to the market, right? The tech market had crashed, and therefore Apple became reclassified as a value company at that point, and then then regained its way back to 100% growth, and then has shown some, as you alluded to a couple times, it dipped a little bit back into value, but this year Apple is 100% growth. But as you mentioned, the annual reconstitution uses currently the three fundamental factors. Originally, it was just book to price, but the methodology did evolve over time, adding the long-term growth metric in the 90s, but then in 2011, that long-term growth metric, because analyst coverage was dropping, and so we needed to replace that metric with a combination of the medium-term growth forecast and the historical 5-year sales per share growth. So those are the underlying metrics that are used to calculate a company's style probability, and then the value score, which is only book to price, and then the growth score, which is 50-50 of those two medium-term growth forecasts and the historical growth. They're then combined into a composite value score that takes 50-50 of the growth and value scores. And then based on that, a company is reassigned relative to other companies in the Russell 1000. And the Russell 2000 growth and value is calculated separately because we don't want size to distort the growth and value classification. So the Russell 1000 companies are scored relative to other Russell 1000 companies. And that's what determines the style calculation, the style weight of each of these companies at each annual reconstitution in June.
So there you go, listeners. If you're nervous that your favorite name is now a value stock, don't worry, that could change again and may change more frequently in the future. Again, we'll get to that in a little bit. But of course, the actual annual recon is pretty much upon us, coming up at the end of the week. Catherine, you kind of touched on it, but how many shares are you expecting to change hands in the blink of an eye after the close on recon this year, Catherine?
Well, I think the market is predicting roughly a similar level to last year. Of course, it's hard to say until the actual close, so we'll know more tomorrow at the close. Both NASDAQ and NYSE are prepared to give me their final count, so I'm happy to share that with you afterwards. But yeah, I think largely the market is expecting the trade to be about the similar size as last year's reconstitution trade.
And before we get into next year's schedule change, which is a big one, any other interesting surprises from the data as you were crunching the number this year, Catherine?
I would say, not surprises, but really just a reflection of what's happening in the markets. I think that in terms of new entrants, we saw more healthcare companies coming in, financials, industrials, consumer discretionary. The IPO market picked up just a little bit. We're adding 2 IPOs to the Russell 1000, 7 IPOs to the Russell 2000. So, although, I think with the over concentration of markets in 2024, there was a lot of hype around, companies, like, are there just fewer companies to invest in? I think this year's reconstitution just reinforces that no, publicly listed companies, it's still a healthy market. If you look at our extended Russell 3000E index that includes microcaps, there's still 3,400 stocks in there. Still ample opportunities for investors that use the Russell 1000, Russell 2000 indexes.
All right, let's get to the big change that you kind of hinted at already. For years, as long as you and I have been talking about this, and obviously extending well beyond that, Russell has been an annual event. The Recon has been an annual event. It's kind of what added to the allure of it, is this semi-mystical annual event. It took place after the close, large numbers of shares changing hands. It also gave us a nice annual glimpse into some of the shifts and the trends we're seeing playing out in the marketplace. But as you alluded to, we're living in somewhat different times and indeed different markets right now. So maybe you could argue the notion of an annual event a little bit dated in this market. It sounds like that's what you were hearing from the clients as well, Catherine. They wanted a recon on a more frequent basis to help them adjust to these trends we're seeing playing out and some of the vol that we're seeing playing out. Is that the case, Catherine? Is that why you went to a biannual recon coming up next year?
Yeah, there are a few different factors at play, but the primary reason was the growing size of that trade at Reconstitution. Since 2019, the Reconstitution closed trade has been above $100 billion and consistently so and growing in most years. And so that, I think, started to concern some of the index trackers that, this is becoming an even larger event than it used to be, especially as you saw that as we've seen the assets grow too. So it's natural to then see some of that trade increase as well. So that was really the primary reason. But then, looking at additional factors like how quickly the markets seem to be changing the dynamically, from year to year. I did an analysis of like the volatility of the markets, over the past 5 years versus the 15 years prior to it. Certainly the last 5 years have been more volatile. Then also the fact that, when we consulted on this, index users felt that the markets could support a second rebalancing event, which, we ended up with a second Friday, November effective date that gives you ample time from the Thanksgiving holiday, which would be lower liquidity, right? The fourth Thursday in November in the US. And, originally we had consulted on, whether to reconstitute on the third Friday of November, and then the feedback came back that is still too close to the low liquidity period over Thanksgiving, and therefore, we ended up with the second Friday in November as the reconstitution effective date for the semi-annual recon.
So we can look forward to next year, our usual time frame, and then an additional recon.
No, before Thanksgiving, actually.
Oh, pre-Thanksgiving. Okay.
Yes. So that is actually something perhaps some traders could look forward to. That the semi-annual reconstitution will be over by the time Thanksgiving rolls around.
You can enjoy your turkey in peace. I like that out there. Well, Catherine, since we're doing a deep dive into all things Russell 2000, it seems like it only makes sense to shine the lens of our program there as well. So listeners, head on over to cmegroup.com/TWIFO. That, of course, gets you to the TWIFO This Week in Futures Options reports. So you can follow along with the program at home and then go to that asset class drop down, listeners. You're going to go down 4 slots to equity indexes. And then in the product family, you're going to go down 3 slots to the Russell 2000. And from there, you'll see volume-wise, we're kind of holding steady this week, right around 25,000 contracts. We've obviously seen the Russell 2000 do a lot more paper of late, so this week kind of quiet. But then again, we are heading into a holiday week. Next week, some folks may already be heading out of Dodge, especially now that we've seen what seems like the vol coming in on the other side of this Middle East crisis, and also crude oil obviously taking it on the chin as well. But a lot of interesting things going on out here in all things small caps. If you want to see in terms of, again, total volume, about 25,000 contracts. So that's pretty much about what we'd expect. And in terms of concentration, it's pretty much lining up like a lot of other equities. Near dated is the name of the game. 27.4% of this volume is going the way of the dodo tomorrow. So it's not all 0 days, not all going out today, but 1 day to go. By the way, if you're wondering what's the 0 day strike and option of choice, it's the 2180s, and the rut was hanging out at 2176.40 as we were coming into the start of the segment. So people obviously rolling the bones that we're going to break through that 2180 strike by the end of the session. Nearly 500 contracts going up there. About 300 of that today, and then 100 or so earlier this week. And then we also have a lot of action on the 2100 puts going out in 1 day, which again shows you that the Russell 2000 not immune to the put bombing that goes up in the E-mini and everywhere else. People just like to pick up their nickels or indeed their pennies in front of the steamroller. If we go out a little bit farther out to maybe a little bit more, dare I say it, longer term paper and a little bit more maybe meaty, relevant paper, we go out to 15 days to the July 2200s, listeners. They were pretty active this week as well, going up about 700 times. It seems like, though, paper was taking those off. They were taking those off on Monday and Tuesday. It looks like they were maybe closing a 2200, 22 half vertical. They both went up about 600 times this week on Monday and Tuesday. So it's like paper getting out of some upside, which is kind of interesting. Maybe they saw the recent rally we've had in equities and deciding to get the heck out of Dodge. Either way, those go out in 15 days. By the way, if you're wondering what is the vol right now in small caps, let's go out a little bit. Let's go out, let's say, 11 days. How's that, listeners? And the vol right now, 1766, off 4 points. So again, contributing to that vol annihilation theme we've been having here on the show this week. Skew-wise, we've talked about this before. When it comes to the skew in the Russell 2000, it's always been a somewhat unique beast. Obviously, the market cap of single names like NVIDIA or Apple pretty much eclipse the Russell 2000 or about in line with it. So you're seeing interesting developments in the Russell 2000 that you wouldn't see in, let's say, the S&P 500 or the NASDAQ, which is why a lot of people use it as a skew indicator. It's one of the few indexes where the calls can actually catch a bid. You don't see that in the S&P or the NASDAQ really ever. So looking right now, let's see, how are the calls shaping up here, listeners, with 11 days to go in the Russell 2000. Last week, they were about 1.8% discounted, which is actually kind of light for a major index. This week, those calls have come crashing back to earth. They're 11% discounted. So again, some of that is the move we've had crushing the skew. Some of that is just the vol getting annihilated. So interesting stuff. The puts right now, they were 5.6% bid last week. And this week, they are 14.3% bid. So a hefty bid to the puts, a steep discount to the calls. It looks kind of like a regular equity out there this week, listeners. And if we go a little bit farther out, there is some more paper that kind of caught my eye that may intrigue you. If you want to go a little bit farther out, listeners, for some longer term positioning in the rut, how about 85 days? That's an eternity in equities these days. That gets us all the way out to September. I know in this tweet by tweet market, it's kind of hard to think that far out, but nonetheless, some folks appear to be. The 2300s in September also pretty active this week, about 600 of those going up. If you're wondering, they went up both straight up and looks like as part of a call spread. So maybe you like it better as the 2300 23 half call spread than September. That's going up today a couple hundred times for about $10. So maybe you don't like the straight up outlay of the 2300s by themselves. So maybe that call spread is a little bit more attractive to you. If you like them straight up, they were trading a lot earlier this week. The 2300s were trading for about $35 on average out there. So that's a bit of a meaty outlay. Maybe you like that call spread a little bit better. So there you go, listeners. There's a few interesting ways folks are lining up in Russell 2000 options, at least right now. All right, Catherine, that is going to do it for us on this special Russell 2000 themed flavor of TWIFO. But before we go, Catherine, we talked about the new dates. We talked about some interesting surprises that you found when you were crunching the numbers, some interesting and maybe surprising changes you made to the classifications for some of the big names for Russell 2000. But before we go, we like to leave our audience wanting more. So is there any other interesting hints or teases you want to leave with our audience in terms of something they could look forward to in the world of Russell 2000? Now is the time, madam. The floor is yours.
We are continuing to develop new indexes and ideas. I would say that what seems to be popular now is looking at different slices of the market. We recently launched a Russell Texas Equity Index, which includes Russell 3000 companies that are headquartered in Texas. But largely, I would say the core story begins with the Russell 1000, Russell 2000. We have more research coming out on growth and value indexes. And I do have some blogs published, like talking more specifically about the changes around this reconstitution. So please feel free to check out our website for additional information.
And hit us one more time with the schedule for next year, the new and improved biannual schedule, Catherine.
Yeah, so the next year's biannual schedule, I do have a paper that talks in depth about the decision-making process that went into the decision to move back to semi-annual. So to reiterate, next June, we'd still be reconstituting on the fourth Friday. That doesn't change. And then the new additional semi-annual reconstitution would take place on the second Friday of November. So look forward to that.
Well, Catherine, it used to be an annual event, but biannual sounds a lot better than annual. You know what sounds even better than that, Catherine, is quarterly. What are the odds we see maybe next time we talk, this time next year, we're talking about a quarterly recon in 2027? What do you think about that?
I think might be a little early, but certainly that's something we will continue to keep an eye on. Whether there's demand for more frequent rebalances. For now, next year the first step is to move back to a biannual or semi-annual reconstitution.
All right, we're getting a little bit ahead of ourselves, but there is the opportunity. I'm so biased for short term now, Catherine, because the entire options market lives and dies in a single day now. So to think out just biannually, to me, that's a different frame of mind entirely. But we're looking forward to the recon coming up at the end of this week, and of course the updated schedule next year, Catherine. And I'll look forward to maybe future chats down the road, and who knows, maybe we're talking weekly recon. What do you think, Catherine? That would keep you pretty busy, I think. You may not like that.
That would keep me very busy.
All right, well, we'll stick with biannual for now. I appreciate you joining us. Listeners, you can obviously go check out all of Catherine's insights on the blog there if you want to learn more. That's going to do it for us on the network today. Back again tomorrow for an awesome doubleheader. First off, volatility views with our buddy Dr. Vix and Mr. Matt from Orats, and then we'll be doing double duty coming in on options oddities exclusively for the pro folks there. The optionsinsider.com/pro is the place you go to get all of that unusual activity. And we're back again on Monday for the option block. I'm not a monster. Everyone's traveling next week ahead of the July 4th holiday, so I'm not going to make everyone come in just to do TWIFO. So no show next week, listeners. But we're back again in 2 weeks. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.